Good morning everyone and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Friday the 3rd of May. It is Payrolls Friday and that is a key focus for markets, and moving into Payrolls Friday what we see is a very mild dollar strength move, certainly across the euro dollar and sterling dollar, and that sort of continues the move that we've seen in the wake of the Fed. Fed actually on Wednesday turned the dollar around, turned the move which had been corrective, turned that completely on its head, and the use of the word transitory with regard to inflation certainly had that impact, and that has continued with the dollar making moves to the upside. We've also seen treasury yields moving upside on both the 2-year and the 10-year, and that has certainly helped the dollar in its recovery. Now, can we see this payrolls report today continuing that trend of dollar strength is the question. Strong payrolls report with regard to headline jobs number being positive, and also average hourly earnings being also positive and strong. That would help the dollar gains, I think, and that would be the key focus that the market is looking for today. Now you can see here that payrolls at 130, expected to come in at 185 with earnings growth of 3.3%. That is the expectation there. But before that, we've got some data as well. We've got the services PMI coming out for the UK at 9:30, expected to come back up to 50.5 from a very disappointing 48.9 last month. Services PMI, service sector, is around about 80% of the UK economy, so it's a very important number for the UK, and also that will be impacted on sterling. Then we're looking out for Eurozone inflation numbers at 10 o'clock, expected to see inflation ticking back on the headline basis to 1.6% from 1.4%, and the core basis up to 1% from 0.8 last month. So an improvement in inflation on the Eurozone expected there. After payrolls this afternoon, we've also got the ISM non-manufacturing, which is again expected to improve, 57.0, 56.1 last month. So likely to see, if those numbers are seen, I think the dollar is likely to find continued traction in this move. Right, so in terms of my chart of the day, we've got the Kiwi dollar, which has been, let's look on the daily chart first, has been building this downtrend channel over the past 5 or 6 weeks. That trend channel, posting lower highs, lower lows, broke below a pivot, a previous pivot at 66.85 up to 67.20, pivot band. That had been consistently the turning point pretty much for the past 10 months actually on Kiwi dollar. Now breaking below that pivot band then becomes resistance, and that's what we've seen in the last week or so, that 66.85 becomes resistance, rolling over, forming this downtrend channel. Now we've got these continued corrective outlooks on the momentum indicators, with the RSI failing in the mid-40s, MACD lines seemingly set to cross lower, as are the stochastics, and I think that that would suggest that rallies in this downtrend channel are a chance to sell. So we've got the little early basis of support today, but I cannot see that that's going to be the beginnings of a recovery. I think anything that gives you an opportunity, I think, to sell on Kiwi dollar is an opportunity. Now, what you have on the hourly chart is this old support of 66.40 becoming resistance yesterday, so that's your basis of resistance initially, and then below that you've got a lower high at 66.65, and interestingly enough, 66.65 is pretty much where we see that downtrend channel coming in today. So nice sell zone between 66.40 and 66.65 on the Kiwi dollar. Now I'd expect to see the market testing 65.90 in due course. That is an old pivot, or certainly the old December low, which basically remained intact in April. Closing breach of that really does open the downside though. So I think that this is a chart to be watching, and one that I think could have some downside traction in due course. So I wish you good luck in your trading today, and I will speak to you later.